All right, good morning, gang. We have Thursday, January 21st with the Tradingology Trading Room coming to you. And as always, we have our great friend, Dave, joining us from Strong Market. So good to see you, Dave. Happy Thursday.
Good morning.
And welcome, gentlemen. Andre, Kyle, Mark, good to see you guys. Looks like Andre's in twice. He's doubling down.
Good for you, Andre.
Yet one more Thursday. We'll pull over the calendar because we know Thursdays are unemployment claims, right? We were looking at it earlier this week where they were expecting another 900 plus. Oh, but look, the forecast was 930, but it was only 900, so it's green.
Yeah, it's down 26,000. So yeah, that's good. Yeah.
Don't tell that to the 900,000 people that applied for unemployment for the first time, but apparently it's good for everything else because the market is doing a little whipsaw this morning.
Yes.
So figure that one out.
Yeah, I'm surprised that we got any kind of a decline at all on those numbers, but yeah.
Right. Yeah, you're surprised it's not just rocketing up to 2,000 for the internals. Big major move here. We are still negative on internals, so although we did have some nice bullish moves and a lot of our indicators just triggered and worked out for a couple nice longs across the board there. Be careful if you're still holding because we are negative bullish, on both volume and issues on the internals.
Right.
So this could turn around in a heartbeat.
Yeah, and the VXX is down as well. So our VXX trades, the two that we have on are,
Yeah, the first one's actually getting close to its target profit. I was going to post in the channel for VXX, but yeah, you're dead on there. Both are looking great. Doing what they're supposed to. We like it when systems work.
Absolutely.
And obviously the latest news that everybody saw around the world is we've had a changing of the guard. So inauguration happened, no major events. Market was happy to close out the day. Executive orders is the story of the next day or two here on reversing everything that they did. Seems like every president does that. They come in, they reverse what the last guy did, or at least a bunch of things. So we'll see where we head to from this one.
Yeah, an interesting factoid is that yesterday's advance was was from the time of the election until the inauguration day. It was the largest advance in the history of the market for an incoming for a change.
Interesting.
Yeah. The next biggest one was 8.8% with Clinton. I forgot the other one, but anyway, 8.8% for Clinton, and Biden was up 14%.
Wow. We know back in 2016 when election day happened, that's when that rally started as well. So it's interesting how elections, inaugurations do come into effect and do affect it, whether they say it does or not. You can look at history and see obviously it does.
Absolutely. Yeah.
I saw an interesting comment by someone a few weeks ago, or it might have been last week, where they were saying, they'd expect they can crash the market in the first year of the presidency because then he's got 3 years to rebuild it back and say he did a good job. Other than, starting at all-time highs. It's almost a bad thing for an incoming president to be at all-time highs because where do you go from there? You just have to go up, and how do we keep going up?
Yeah, and we've got the vaccine. Everything is fine now because we've got the new president coming in, and yeah, where does he go? That's the big problem. One of the things that I was talking with somebody else was the fact that we had the inverted yield curve about 18 months ago. It was back in the summer of 2019. We had that repo rate 10% overnight in the repo market in September of 2019. And so it's right about now where we anticipate a recession starting. and it's funny because we've been through this pandemic and really the unemployment situation is absolutely horrendous. I mean, 11 months into this thing, 12 months, and we're still at 900,000 a week.
Yeah, it's not going away.
Yeah, and so if the inverted yield curve, which has basically called the 6 of the last 8 recessions, if that starts to kick in now, that's going to be
wow, yeah. Can you imagine if they jumped short-term rates but kept long-terms down? That would be crazy. And they never admit to it, right? You never hear They don't call it a recession until after we're out of it, because the way they do their funny book work, everything they do is funny book work. But recession's also when it's like 2 quarters they need, right? Where it's like, no, this just happened. Recession is coming. So it's the fantastic early warning sign, right? Yeah, you can, like you say, can you imagine if that happened again while we're still in the middle of one?
Yeah. Yeah. And, you know, if you watch some YouTube videos, a lot of people use the Fred charts. And the Fred charts don't have a gray line. When they use the gray lines, it means that we're in a recession. Instead, they're using yellow, which means it's pandemic related decline. So
Or is it because it's current? I was reading that on the Fred charts myself because I was curious, and I think it's because it hasn't ended yet, is when it's yellow, but I could be wrong.
Yeah, I don't think so. I've been using Fred charts for years and years and years, but I mean, maybe they change the way they colorize them.
Well, yeah, they
But
change the rules every year, right?
yeah, yeah. I don't know, maybe, but I don't think so. I think they're using yellow as the sign of the pandemic related economic decline.
Wouldn't surprise me if they change it either way.
Yeah.
Andre's got a question on the VXX short trade. Yeah, the point is, I'll throw an answer in the channel for you after we're done in the trading room. But that is, whether it's a small or a large profit, that is the trigger for exiting, Andre. Profit is profit. And being as they are half positions that we have on that VXX, they are going to be smaller than typical just because of where volatility was. So that is one thing to keep in mind. It is a lower position trade, as you know about when we talk about in the VXX videos. But yeah, I will definitely shoot in some information in the VXX Slack channel for you there, because I'll be looking at closing that too. Let's see.
You guys, you do any trading this morning?
I personally did not. I'm taking a little break with yesterday's fiasco of ridiculous up and up and up.
Yeah. It is kind of stupid. It's just, yeah.
I'd love to be able to get in along and let it run, but I can't let myself do that because it could just drop like a rock at any time. This market is just so crazy.
Have you got the spreadsheet there? We could go over the spreadsheet real quick because it looks like we mentioned, I guess it was Tuesday, we mentioned how spotty the bullish herding was. And yesterday we're up 257 points with no bullish herding in the first column, which is really strange. I mean, being up that high.
Yeah. And the one thing I did notice, and it was in the notes, is a price anomaly of 167. So we had a potential for a drop, and we did drop opening up. Whether that's all of that's left or we got more coming, we'll see.
Yeah, we'll see. I mean, it doesn't look like the market's really going up. In my barometer, which I put into the Tradingology chat room, my barometer, which I checked just to kind of get a feeling of, what the market environment is like. CHI is that symbol, if you guys recall, and it is down just slightly today. So that's my barometer. It looks like stormy weather.
We'll pop that guy over here. What do I got this on, a 15-minute? It's looking like a funny chart there. We'll put it on a daily. Yeah, it's definitely up a bit, but looks like it gapped down this morning and it's retraced.
No, that's CHI. Is that the right symbol?
Oh, it's got CHII. I got 2 eyes. That's why it looked funny.
That's what it looked a little funny because I'm down on the day. So yeah, it's down just slightly, 0.04%. But
there we go.
Like I said, I use it like a barometer, and when it's down, it means like stormy weather's coming. So it's a little bit of selling coming into the market. If it turns positive, then yeah, we're probably racing off to new highs. I still have my targets on the Dow between 31,004 to 31,005, someplace in that neighborhood. S&P around 3950, I think, which is like, seems kind of high. 39 maybe. Let me check here.
I saw something also about target for SPX on 2021 is 4,000. It's like, that's only 3% away. And someone was reading about the market's already pricing in the gains for the year in the first 3 weeks here.
Yep, low end of my range on the S&P is 3904. High is right at 4,000. So
A lot of people are calling for that 4,000 I've seen. And yeah, so what happens when we hit that right away? Do we turn back around or do we just hover there? That's the question.
good question. I mean, there's nobody short this market. If you guys got to watch the Northman Traders video, nobody's short. Everybody's long. Even who's the perma bear out there that's he hated Tesla stock and has been shorting Tesla stock.
Oh yeah, I know who you're
Gunlock.
talking about, but I can't remember his name.
Gunlock.
That's it.
Yeah. He finally covered his shorts, I guess. I don't know how much money he lost, but it must have been a lot.
Ouch.
But he's still negative on the company.
Well, we have some spotty bearish herding trying to form, but it's not well formed as it's already dying away from the first positions. So it's looking like they're trying to cause a problem, but they're not getting their act together. So we'll see what happens here. If they come back into, because as you compare that to yesterday, we were full bullish herding, it weaned off and then it came back for the close. Today it weaned off and already moved to red, but you want to see it hold those first and second positions. As I mouse over this, you see it's only -3, 4, and 5, which is the same thing as the spreadsheet, as you guys know. But for anybody that doesn't know, that correlates to those boxes. So these boxes are these dots in live form. So when we want the herding to be the first and second ones filling out to be what we call properly formed, same thing goes for intraday. If it's going to be a good move down, we want this to be properly formed where it started out at 1, then it missed 1, now it's 2 and 3. So this was halfway decent, but now that we're already losing the first and second, it's not well formed and it's already starting to tail off. So this could turn back around into bullish herding. So just something to keep an eye on throughout the day as you can watch it live as it happens.
Yeah, absolutely. Yeah, it's interesting that, and we've been talking about the weak internals. Internals are really weak today, but the S&P 500 is up, cash index is up over 8. Yeah. Does that, signify some sort of a turning point in the market? Just not enough support here? Possibly. But, President Biden now has really made it clear that he's not interested in Wall Street.
That's going to be interesting. You'd mentioned that when we were talking on the side too, where he's Main Street and not Wall Street. So yeah, will that spell any differences?
Yeah, because, ever since Greenspan started the moral hazard issue of, signaling to the bond market that he was out buying bonds, presidents do signal. And so Trump was very much in favor of a higher stock market, and he measured his success by that. And now Biden is saying the complete opposite. I don't care about Wall Street. I care about Main Street. So is that signaling? Is that a moral hazard? Is that something that he's going to try to squash a little bit because he thinks it's, bad for Main Street?
Yeah, good question. We will see. I saw a funny one. We're like, who's going to tweet now when the market's down 500 or 1,000 points? Who's going to be who's telling us on Twitter? They took Trump away.
Yeah.
He'll probably be telling you pretty soon from Trump News Network, so don't wait too long.
Yeah.
Even on his parting speeches, it was, we'll be seeing you soon. It's almost like, it was almost like a movie where you don't know when he's going to come back and get you.
I'll be back.
There you go. He's Arnold. Yeah. All-time highs, 3 bubbles staring at you right there again. Right now, too, the SPX is all-time high as we speak. All of them, for that matter, since we started. These are all, this was before we started, but pretty close.
Yeah, a little jubilation here, a little celebration, really, but the internals just remain really, really weak. So, I have to, you have to kind of wonder whether or not, and there is something to it. There is something to it. I remember Obama in March of 2009, he was signing a few executive orders. And after he was done, he fielded questions from reporters. And the market was at an all-time low. It was just about the day that the S&P 500 was at 666. And so they asked him about the market. And he said, "Oh, it looks like a good time to buy." And that was, I think it was either that day or the day before or the day after. It was really, really close to that day. And the market just went up from there.
Looks like things are on sale, he said. Look, right now, it looks like everything's overpriced.
You know, by almost every single measurement, it is.
And
So
that's
where do you
the,
go from here? We got the new president inaugurated without an incident. We've got the vaccine. What else have we been waiting for? Well, we're waiting for the employment situation to improve, but that didn't improve this week. What else do we have to look forward to this year?
right? Reality come back.
More taxes.
Yeah. More people have paid to get your taxes done, will get paid more. RTY is the first one that's almost in reality zone, where yesterday it was negative, of the only ones for a little while, and today it is actually the only one that's negative still. So the Russell 2000, is it the leading indicator? Sometimes it is. We'll see.
You know, if you guys have not watched the CME Micro E-mini webinar, we have it archived on the Tradingology website. I went to the CME website to see if I could find it. I couldn't find it. And that thing is gold. You know, he actually gives some trading tips on there on how to use the Micro E-minis. Some pretty good stuff. And one of the things that he did was he measured the difference between, on a percentage basis, the S&P 500 and the Russell 2000 every single year going back to like 1998. And in fact, let me put this screenshot, because I took a screenshot of it and I'll put it in the Slack channel and you can grab this, Dan. I think this is the one right here. Yep, that's the one. It's just kind of interesting. One of the things he talks about in this slide, when this slide is, and I think it's right around the 10 or 12 minute mark, every single year, the Russell has, just about every single year, the Russell has outperformed the S&P 500, except for those years that we go into a recession. Mm-hmm. And so he used it like a barometer of the overall market. There's a couple of times when the S&P 500 underperformed the Russell, and that was when he mentioned that it turned around in July of 2018, because and then before the end of the year, it completely turned around because of the trade wars. So trade wars are international, and they affect the S&P 500 more than a recession does. If we're in a recession, the RTY is going to go down. The Russell 2000 is going to go down because they're mostly domestic stocks, right? And they have smaller balance sheets, weaker balance sheets in the S&P 500. But when we have an international situation like trade tariffs and those kind of negotiations, and then the Russell is going to outperform. But the Russell has outperformed almost every single year going back to 2000. There's only a couple of years where it didn't outperform. And he said the only reason it does that doesn't perform as well as the S&P 500 or outperform the S&P is because of a recession. So, we could use the RTY as a barometer to see if we are going into a recession, if we start to see a top in that.
Yeah, so you look back there, 2007, 2011, 14, 15, 17, and 18. And obviously this was recorded before we had all of 2020 completed, since that just happened. So we don't have 2020's data in here, but that would be another interesting one to add to the stack.
Yeah, absolutely.
I find 2011 here very interesting too, looking at the S&P performance, exactly 0.
Yeah.
Wow.
It's weird. Yeah.
It's just like when they had those closings you had mentioned a couple weeks ago, or a couple, whenever it was, when they end on round numbers. I always find that interesting. It's like it's almost planned, because it can't be random to be that specific. I think it was both indexes for S&P and the Dow were on whole numbers. It's like when you go to the grocery store and you check out and it's $82 even. It's like, well, I never get even.
I've hit my birthday before, my birth year, 1957, perfectly one time. Should have played the lottery that day.
You do that for going to McDonald's right now because that's a single person meal now. It's about $20.
Is it really?
Feels like it. And you mentioned the lottery too. Everyone's doing that. I was in the gas station just for getting gas the other day, and they're like, "Oh, you here to buy lottery tickets?" I'm like, "No, why?" Well, everyone's doing it. Apparently, it's way up. I'm like, "Oh, I hadn't even paid attention." So I guess it is like crazy high again. I don't know if anybody won it this week or not. I couldn't tell you. Maybe yesterday hit it, but that's a big one too. Everyone's playing the lottery. You mentioned that.
Yeah, the chances of you getting winning a lottery ticket are, I think it's probably the worst odds in the world, isn't it?
Right? Yeah, you have better chances of getting hit by lightning twice.
Yeah.
You guys have been a quiet room, soaking up the information. We appreciate you joining us. Andre's got the only question of the day, and I will follow up, Andre, as I mentioned, in the VXX channel. Other than that, we'll probably round out the week unless you guys have any final questions or final thoughts. Happy to share. I'll check out the headlines, see if anything major's happened. Stocks rise to records again as investors buy Apple and tech shares into earnings. I did see something about a lot of company buybacks are starting again. That's another one that's going to fuel it if they continue doing that.
Well, as soon as the Federal Reserve announced that financial stocks, bank stocks could buy back their shares last November, they've just been going up.
Yeah, and that's one of those funny bookworking things, if you ask me.
Yeah. So it's all moral hazard. They're all signaling. You know, it's like you kind of have to pay attention to what they're saying. That's why I think Biden's statement that he's more interested in Main Street than Wall Street could affect the market in a very negative way.
And watch what they do versus what they say too. I think there was an insider report because they all have to report when they sell and buy shares as board members and whatnot. There's a lot more of them unloading than they are loading. So yeah, the corporations might be buying them back, but the executives are selling.
They're selling.
That's a key thing to watch for.
Yeah, that's absolutely right. Our good friend, I think it was Stephen Van Meter, had that on his show last night.
Okay, that sounds familiar. That's probably where I caught it from.
Yeah, he had a chart there of insider selling, and it's highest ever since they've been tracking it back in the 90s.
So beware, guys and girls.
Absolutely, guys. All right, everybody have a great weekend, and we will see you again next week.
Yeah, I think we're going to modify the schedule, Dave, since we're getting busy schedules. I think we're going to go to a Tuesday, Thursday trading room, guys, and we're going to keep Wednesdays for the VXX. So we'll kind of go back to our original plan that we used to do about a year ago on the trading room. So we'll do Tuesday, Thursday, same time. And the VXX call for the VXX members will be around the market open. So slight change for next week, and we can always adjust on the fly. We can go back tomorrow if we need to, but we're getting really crowded right now, so we need to do some adjustments. So we're going to give that a try for a while. So we'll catch you guys back here in the trading room on Tuesday.
Sounds good.
Time. All right, Dave, I appreciate you and thank you for everything.
Yeah, thank you, Dan. Have a great weekend, and we will see you Tuesday.
See you guys.
Bye.